Look at this. Look at this. What is this right? Look at that. The S&P. Look at how extended. What are we on? Cloud 9? What is this? What? Look at the they don't care about our families. They do not care about us. They don't care about our families. Guys, look at this. This is disgusting. In today's video, we're going to take a look at the S&P 500, the NASDAQ 100, the Russell 2000, the dollar, the bonds. We're going to put it all together. We're going to take a look at what the next steps are for the market. All right, so without further ado, let's get started with the video. All right, number one, let's start off by looking at this absolute piece of crap, Apple. All right, so what I first want to look at is this uptrend here on Apple. All right, this is a daily chart of Apple. Let's bring it back to January of this year. We're gonna count how many times this stock bounced off of this uptrend absolutely clean. All right, so first off, started clean little uptrend. First time, okay. Second time, okay. Second time, March. All right. Third time, also in March. Okay, no problem. Fourth time, in April. Fifth time, in May. Okay, piece of crap. Are you ever gonna fall lower? Are we ever gonna fall lower? No. All right. Sixth time in May. Seventh time in June. Eighth time. The eighth freaking time in a row. This stock has bounced off of this uptrend line like it's no one's business. It just keeps bouncing off of this line. Clearly, it's been working. All right. I don't know why it's been working like this, but this piece of crap has consistently held this uptrend level. And this piece of crap has been the reason why the NASDAQ is holding up this well also. All right. So first off, I just want to take a look at Apple. Number two, we got to take a look at Tesla. Okay. Because Tesla has earnings. This NASDAQ stock has earnings Wednesday after hours. All right. So let's take a look at Tesla. Tesla is starting to look. So one thing to keep in mind is heading into an earnings date, there is a thing called an earnings run-up, which means that the stock is going to get a run-up in price prior to earnings. So it gives people an opportunity to sell their stocks. And plus, in anticipation of earnings, everyone is starting to buy in. Oh my God, they're enjoying the hype. And then right before market closes, that's when people tend to sell. Okay, so there's an earning run-up. A lot of people are getting excited about the stock. Tesla is starting to do that. And Tesla had a huge day this morning. It was one of the biggest winners in the market in the morning. Clearly starting to break above. Not automatically a reason to become bullish. Definitely not automatically a reason to become bullish. But clearly, we're breaking above this level of resistance. So we're seeing strength out of Tesla and Apple. Okay. Now, let's backtrack before we continue looking at the stocks, right? Let's take a look at the more macro indicators. We're going to take a look at the dollar and we're going to take a look at the bonds, okay? Because both of those are very, very important in judging which direction the market is going to go, okay? All right, so this is a daily chart of the dollar, the US dollar. The dollar is important because it has an inverse relationship to the market. If the dollar is doing well, okay? If it's bullish, that means that the stock market is going to be bearish because money is going to be flowing out of stocks into the dollar. Right now, the dollar is in free fall. We got a bit of a bottom yesterday. Clearly not enough. It's not as strong as it should be. Generally, if this was going to be a really, really strong move, this candle would have been a very big green candle already. But it's teetering. It's teetering on the brink of disaster. So if the dollar continues to fall lower, then if the dollar continues to fall lower and breaks these lows, then the stock market is going to continue to rise. Okay. So look, guys, very, very simply, guys, look, if we want the market to fall lower, everyone needs to pray. Everyone needs to pray that the dollar gets a bounce. All right. Pray that the dollar gets a bounce. Otherwise, the market is just gonna, it's on the opposite of thin ice. I don't know how you would characterize that. It's on inflated air. All right. I don't know. But basically, this is going to be a repeat There was 2 times in the past decade where the stock market just continued to rise. And this could very well just be one of those times. So we'll see. So far the dollar is not it's not giving us any favors. It's not doing us any favors. All right. We need to see some bullishness out of the dollar. If there's bullishness out of the dollar, then the stock market is going to fall. Pure and simple. Okay. Next, let's go ahead and take a look at the bonds. All right, so the bonds are important because they have a more correlated relationships in the market. If we're seeing strength out of the bonds and we're seeing it continue to push up, then that means that the stock market is also most likely going to continue to push up. What is good for bears at the moment is that the bonds are starting to teeter at this level of resistance. We see some wicks. We saw a big green candle here, red candle, continue to fall lower a bit here. Failure to break above these levels of resistance. So if, once again, the bonds continue to show this weakness, or even just a lack of strength, it doesn't even necessarily need to start falling lower. It just needs to show a lack of strength, breaking above these levels of resistance. If it does not break above levels of resistance, and if the dollar begins to bounce, then the stock market is going to give it a little pullback. Can I get an amen? All right, so there's that. So basically, it's very, very simple. All right, so that's what we're looking at right now. Let's take a look at the S&P 500, the NASDAQ, and then the Russell, and put it all together and see what is left in the market and where the dust is going to settle. All right, so bear with me. All right, bear with me here. When the S&P, this is the S&P 500 on a daily chart. All right, when we're getting a flagpole like this and it's tilted up like this, not the most bullish sign. Okay. Similarly, when we get a bear flag, you could look at this on the crypto charts. You could look at this on any sort of chart. All right. You see this a lot on Bitcoin. When you have a bear flag that is falling like this and support is basically falling like that, that is very bullish. This is generally not a bullish bull flag here, because generally what ends up happening is the price falls down. This is not a sustainable move to the upside. None of this really was a sustainable move to the upside. It still really isn't. We are in extremely overextended territory, so take it with a grain of salt. But the thing that was really, really interesting today was what happened around 3 o'clock. So we had major resistance at 451.91. We ended up touching 451.93. 451.91 was a major level of resistance. As soon as power hour basically started, we had a big push to the upside, touched this level, and began to fall. So based off of this, it's going to be really, really interesting if they just continue. Oh, sorry. It's going to be really, really interesting to see if they just continue to hold this level of support at 450 and just continue rising. I'd be really, really shocked, because this was a really disgusting move to the downside to end the day. And the daily chart pattern and everything is not, it's not helping either. So things are pointed for a potential pullback in the market. I've been saying that for a few days now. But you have 2 choices. Number 1, you don't go long. Number 2, you wait for a pullback and you go long. The third choice is the more risky one, is going short. You could try to go short into the strength, but you know you're going to end up underwater, like some of our puts. We're in 2 put plays. We're short the S&P 500 and the NASDAQ. Both of those don't look like they're going to be profitable trades, but that's why they're just trades. And yeah, we didn't average down. Nothing too crazy. We made money on the IWM put, but you can't win them all. It is what it is. But regardless, this on the 1 minute chart is very, very weak. It should generally, on a normal day, if the market was not this overextended to the upside, then this sort of setup on a 1 minute chart to end the day would really permeate into the next day. And it would bring some downward momentum. But this is some crazy, crazy upside momentum. When you're taking a look at the NASDAQ, look at how far away we are from the Bollinger Band. So we're 3 points away from the Bollinger Band at the highs. We closed $2.50 above the Bollinger Band. This is really, 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 really like very overextended. We didn't get any sort of pullback. This is it's very strong. And if you look at the NDX, it looks even more overextended to the upside. So the NDX is basically the SPX version of the NASDAQ. Look at how disgusting this looks. This is not some sort of setup where you want to go long. All right, that's purely what I'm trying to explain here. This is not really a setup where you want to go long. You can't expect it to continue. All right. And then I want to take a look at the Russell. So instead of taking a look at the Russell 2000 or the IWM, right, I want to take a look at the RUT first. So the RUT is the IWM version of the SPX. So we are at a major level of resistance here on the IWM. We came back, retested. So we had a huge down day yesterday. That's when the puts worked out on Friday. Sorry, that's when the puts worked out. We bounced up, and now we're at this level of resistance. Okay, so now when we're taking a look at the IWM specifically, we made a new high similar to what the SPY did. All right, but like the worst part about this now is that we can continue rising. The IWM is not that overextended compared to the SPY or the NASDAQ. So the NASDAQ, relatively, it's trading up here according to the Bollinger Bands, right? The IWM is still trading within the Bollinger Bands. It could still rise higher as long it's going to remain inside the Bollinger Bands, basically. So it's not going to be overextended to the upside. And crazy little situation that we got going on over here. Doesn't look like we're going to get a major pullback unless the dollar gets a bounce, and all of the equities are skyrocketing. So fun little situation we got going on over here. All right, so I hope we're just gonna have to take it one step at a time. We day trade and we make money regardless every single day. It is what it is. Some swings don't work, some plays don't work. It is what it is. I was bullish down here. I wasn't expecting it to be this bullish, but it is what it is. All right, so without further ado, I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. I really, really appreciate all of your love and support. Yeah, take care. Have a good one.